All right, welcome to Stock Market Review for this month. All right, so just a quick couple of announcements. Basically, the purpose of the Stock Market Review, also known as SMR, is we're going to take a look at the stock market. We're going to also take a look at NASDAQ, S&P, and the housing market as well. We're going to be together for about half an hour. And the purpose of this is just to give you a run through using technical analysis of where the markets are, what our projections are based on Elliott Wave and things of that nature. So we're going to go through that in pretty good detail. We are going to look at some live charts on the markets because a lot of our charts that I've drawn for this week came on Sunday, and the market has sold off since Sunday. So let's go ahead and get started. First thing I want to talk a little bit about, of course, are the risk control. All right, and we have to know there is risk in the financial markets. So make sure you understand that we deal in a realm of probabilities, not guarantees. And so therefore, you always have to protect yourself. Risk control is a big part of being successful in the trading arena. And we can help you with that. I've written several books on it. And risk control pertains to no matter how you trade, whether it's day trading, position trading, or swing trading, or even longer term trading. You have to be really good with risk control in order to be successful in this business. Also, too, in what we talk about today, always run that through or by your financial advisor just to make sure that anything we talk about is suitable for you, because I don't know your personal situation, and of course, they do. All right, and don't forget to give us a like. Take a moment just right now and do that. And again, this is our new schedule coming up for this week. And we are going to be meeting now once a month. And basically, it's on the first Wednesday of every month. And it's at 4:30 p.m. Pacific time. And so we'll be back next month and the month after. All right. Now, in terms of money management and things I have to offer here, we have several books available. And you can get these on Amazon or wherever your major bookstore is. And one of the books that we're just come out with is The Art of Trading, being published by Wiley and Publishers. And that's a book that's going to be due out this year. And it is going to be a very comprehensive book on trading the financial markets. I also have a book on Elliott Wave Techniques Simplified, published by McGraw-Hill. And then my two books on money management talk about the importance of money management and how to do it, regardless of the type of trader you're with. And then I have several other books as well. All right. Trading the software, we have a variety of different tools that we use when we look at markets. You're going to see those on the charts today, and I'll point those out in more detail. If you want to learn more about it, visit our website, or I'll put some links below in the recording that will be on YouTube for this. All right, let's take a real quick look at one of the charts that I worked on over the weekend. And this is the daily Dow Jones Industrial Average chart. And I've got a couple important levels I want to go over with you here today. And hopefully everybody can hear me okay and see everything. If you can't, let me know in the comments area right away, because usually I'm the last one to know if we have problems, right? All right, so let's take a look. Now, we had what we call a target zone up here, and this was an Elliott Wave target zone based off a long-term Elliott Wave pattern that began about 2009. And so the markets reached this target and did it recently. And usually when we get into this target, we're usually getting close or at a top. And of course, with the recent selling, we all want to know, hey, have we reached the top, or are we still kind of going to hang here for a while, maybe go back up into the target zone? And we're going to discuss that. But for right now, just realize that the market did hit that top. And when it hits that top, anything after that is possible. In other words, we could get a sell-off, a bear market, and a change in trend at any time. The question is when, okay, do you actually know that it's a significant enough sell-off to cry wolf at this point? And we're not quite there yet. And one of the things we're watching is that even though it broke the trend line, we still have a major support, short-term support level at 37,611.55. And like I said earlier, we're going to look at the live charts, but we have not gone below that yet. So it's very possible, as long as prices stay above that, to get a turn at any time and head back up. Now, there's one other indicator that really I rely on quite a bit. This is called the Precision Trend Filter, known in the industry as the PTF. And this has a 75% probability rate of being accurate. And when it's green, it's indicating that whatever the highest price bar in that green area, which is a price is sitting in the wave 5 target zone, there's a 75% probability that prices are going to go higher, which means that that is not a top. And so that is something that is worth taking note, because basically any pullback that we have in the market, no matter how it appears at this time, and no matter how many people out there say it's severe, it's a little early to say it's severe at this point, simply because we haven't gone below this support level yet. And with this indicator remaining green, that's an indication that any pullback here is short-term and should be followed by more highs. Now, if this comes back and turns and goes back up into the target zone, this probably will turn yellow, and that's neutral. And at that particular point, we really, at that point, then expect some type of final top. Now, a wave 5 target on the daily time frame, which is what you're looking at here, is also a wave 3 top on the weekly chart. There are 5 waves in these different wave sequences, and this is known as the Elliott Wave. And when you have a fifth wave on the daily chart, that usually indicates that it is the internal structure that we're seeing on the weekly chart. And so that would be a wave 3 on the weekly chart, which means after a wave 3, you go into a bearish wave 4. And on a weekly chart, that will appear as a major correction and a bear market on the daily chart. So we are expecting a bear market at any time. I think it's a little too soon yet to say it is. Some other things have to happen before we can declare that. But I do feel we'll be in a bear market in 2025. And maybe the lower rates that come in the interest rate formation this fall will cause some optimism to come back into the market, and you'll see new highs. And then maybe after the election, we see some selling off in the markets that could, at that particular point, be leading into a bear market. So we're going to keep our eyes on these support levels. I recommend you do the same, because these are the truths of the market. Everybody can have an opinion, but these levels here have a real meaning. And if they get broken, then we have to take note of that. Now, a couple of things. You can see different support levels. I've got one here, I've got one here, and I've got a major support level here. So if we break this one, all right, it's still possible to turn around and head back up, and especially if that turns green. So this is where the PTF is a lot of help here. However, if the market does not turn up and keeps going down, and this turns red and goes below this support level here, then that would indicate with a high probability we're entering a bear market and we're not going to see any further tops. That is not the likely outcome with what I'm looking at here. So the likely outcome is another high into the wave 5 target zone. And this target zone here starts at 40,238. We've already gone up to that level, but it also could go as high as 47,360. So that's a range. And that range represents the bullish top target zone. So keep that in note. We'll see what happens by next month. If you want a weekly update on this, we have a variety of different services. One of our most popular is called the Market Opportunity Report or more. And you can go to our website, and I'll put some links in it below for you to subscribe to our weekly update, where I give you new charts and a video every Sunday before the market opens. So that's kind of what we're looking at in terms of to gauge how serious a pullback is. And for right now, as long as that short-term support at 37,611.55 holds, I don't see a problem yet with the markets. It could change, but for right now, that's kind of where I'm at. All right, if we take a look at the 60-minute chart on Sunday, we had a red PTF. I believe we still have one. And this chart is different than the other chart, but it is the same market. So it's still the Dow Jones. However, on this particular market, every price bar represents an hour activity, whereas on the other chart, it represents a full day. So this is considered a shorter term chart. So when we look at this, we have a bearish PTF, which was indicating that on Sunday, we were going to see some more movement down. We've gotten that this week. And again, we'll take a look at the live charts in a moment and see what kind of help they show us on what's going to happen for the rest of the week. So that was bearish, indicating more of a pullback is coming, but not necessarily the entry into a bear market. On the S&P 500, we're having a pullback too, but notice we have a green PTF here on the long-term weekly chart as well. So any pullback here, and look out, we've gone straight up quite a bit in the last, I would say, 2 years, and especially since the October 23 low, it's gone straight up. So a pullback here is not unreasonable, even if we suspect one more high. So we're kind of looking at that, and we reached our short-term area here. We're seeing a pullback. So I would anticipate another high eventually coming on the S&P as well, and the same for the NASDAQ. All right, same thing for the NASDAQ. So again, I think markets are in profit-taking mode here. And I think after this works its way out, we should have more highs. So I don't see a major bear market yet. One later on this year, yes, but not quite yet. And if things change, I'll let you know. All right, so Bitcoin is another thing I wanted to look at today. Now, long term, I'm fairly confident Bitcoin is going to get above 85,700 and reach its upper range between that and 105,000. So this is the ultimate target. Now, this would be a wave 5 here. This would be a wave 3. And what we're seeing, we're trying to see, this is the wave 4 target. We skimmed it here. And we're kind of seeing if we're going to go back in it one more time before we get the rebound. So again, I think the wave 5 target is on the horizon. I don't think you're going to see what happened earlier, years ago on Bitcoin, where it went all the way up and then all the way down. I don't see that happening this time around. And notice how bullish the charts are on the long-term weekly chart. So again, I think we just got to work our way through this consolidation or correction, which is known as a wave 4 in a trend analysis called the Elliott Wave. So once this resolves itself, for those that like Bitcoin and want to buy into it, I suggest this is an opportunity to do so. But again, use risk control and make sure you're putting money into Bitcoin that you can afford to risk. All right, again, everything we're talking about here is based off probabilities, not guarantees. But for right now, it looks like we're going back down a little further in Bitcoin. We've got a lot of red on the 60-minute chart on the left here. So we're still coming back down into that area. All right, CPT. CPT is a ETF for residential real estate, and it's a pretty popular one. And earlier we had forecast that we were coming up into a wave 4 target zone, and we certainly have reached that. We've got a red PTF over here. So after wave 4, we expect it to dump down again. So not unlikely for real estate to at least show some bullishness this time of year, because we had that a heavier buying season, and it's almost coming to a close right now. But it has definitely come up a little bit. We saw more listings, very few, not the transactions that people wanted to see in the real estate industry, but we certainly had at least some price movement, still stable, at least holding its own, not crashing. And with the lower interest rates possible coming in, we could go deeper into that target zone as well. Now, I want to make no mistake about it. I am not bullish long-term on basically any of these major asset classes. All right. The only thing I'm really bullish on is Bitcoin coming back and making that new high. But I think it'll do that by the end of the year and early 2025 as well. And then I expect a significant sell-off, even in Bitcoin and across the markets, for the most part, the asset classes like the equities and the housing market. So longer term, 2025, I'm bearish. Short term up to the election, I'm bullish. Okay, so that's kind of what I want you to take away from today. All right, I also like when we talk about real estate, I like to look at the Case-Shiller Index versus the CPI. Now, the Case-Shiller Index is a measure of the average home prices in the United States. Remember, real estate's very local, so it's always going to depend on your local area. But basically what we're looking at here is the Case-Shiller Index being graphed in red here, so I'll put Case-Shiller here. Then under that, we have the CPI, Consumer Price Index, which measures the inflation minus things like energy and so forth. So this goes back 50 years. So we go back into the 1970s. And what you can quickly take away from this chart is that for the most part, the Case-Shiller Index has remained above the CPI. And that makes it right away an asset that is a good hedge against inflation. So not only do you get a place to live, but you got an investment. And for most folks in America, this is their starting point for building wealth. They have a place to live, they're paying down a mortgage, they're getting tax breaks on the mortgages, and yet at the same time, their house is going up in value. So that's a win-win across the board. So housing's been a very popular thing for people to go into as a big investment, but as an investment in their early years when they're building their families and so forth. So probably the first place to go before necessarily stocks. All right, so certainly a good place to put your money, but there's times when even housing, as we know, gets into bubbles. And we saw it back during the financial crisis. And again, we're seeing it right now. Okay, so that's that. Now, what's interesting is that bubbles usually burst, but bubbles can last a long time. On the next graph I'm going to show you, it really illustrates that point. But let's talk a little bit about what happened here to get us where we are. So basically, back in the 1980s, 1990s, interest rates weren't low, but banks did their job and checked incomes. And basically, you know, if you had a good job and you had some money stashed away and you could put a down payment in, the banks would loan you the money for the home. So a lot of people got involved in that. Interest rates went low back in this period here compared to certainly what they were in the middle 90s and early 80s. And so housing started taking off, certainly because the economy started doing better. We started also having, again, lower interest rates, but also a very other important thing happened is that you had a lot of investment banks getting involved in taking mortgages and reselling them on the secondary market. So that's called securitizing mortgages. And when they did that, they created securities with these, But at the same time, banks started making loans based on the fact that you had an asset versus so much of an income check. And if you remember back then, basically, if you could breathe and you had property, you could get the loan. They did no income check loans across the board, and they were all adjustable rates. So everybody got into housing. Rates were pretty good, and with the adjustable rates, you could get in really easy, and it sounded very attractive, so everybody did it. And then along came a problem, okay, where markets started to reverse and go down. We had a recession. People couldn't afford these things. And then you had the crash. Banks went under. They weren't getting their bank money back. And then you had the crash, and it came down to a level here where it recovered. And then we started moving up. Banks learned their lesson, but interest rates remained even lower because in order to bring us out of recession, they lowered the interest rates. The economy improved, and the market started moving up. We had COVID. And then you had stimulus money, and you had people moving out of the cities into the suburbs. And here we are today with prices skyrocketing once again, way too high compared to the CPI. So now we've got an interesting dilemma here. We've got prices in homes twice as great the distance here as it was here during the financial crisis. And you can see where the CPI adjusted for inflation and came up there as well, but so did houses. So it's remained pretty consistently far apart. In order for this to get down to levels, historical normal levels, you're talking probably about a 50% drop, 40 to 50% drop in home values. So if that doesn't scream bubble, I don't know what does. So that's one chart to pay attention to. And again, bubbles can last a long time, as this illustrates here. This is the 2006 to 2008, I would call it, financial crisis here, where we actually started getting into bubble territory in just before 2006, and then cracked in around 2008. And notice how much longer it took to reach a bottom, and a lot longer than stocks. And that's because real estate's not as liquid as stocks. So the process of getting down to a bottom takes longer. And then we recovered, and up we come here. So the point of this is that bubbles take a while to burst. And then once they do burst, especially in certain asset classes like real estate, because of low liquidity, they can take a long time to unwind and get to a bottom. And so I'm afraid we may be looking at something like that right around the corner with the real estate market. Now, mortgage rates currently are coming down. This was basically based off last week's rates. The 30-year rate was at 6.86, and it was up around 7 before. There's a 52-week average. All right, a year ago it was at 7. 15-year rate is at 6.21, so the 30-year jumbo is at 6.98. So rates have come down, and basically one of the reasons for this is they're anticipating a rate cut in September of 25 basis points. There's some talk. Some people think you might get 50 basis points. I don't think so. Probably 25. All right. Now, here's just a quick little graph on interest rates as of July 31st for 30-year mortgages. And they also have the 15-year mortgages and the jumbos. So they kind of compare it. But as you can see, they spiked up here around 8%. And now they have come down here. And we'll see what happens with these rate decreases if they'll go much lower. Active listings increased in all regions as well. This is basically the June 2024 levels. I don't have the July ones in yet, but basically you can see where, and this is in pretty much all the country, in California rather, that you have in San Francisco, you have listings increasing 40.5%, but transactions were down 1.1%. In Central Valley, up 34.5 and down 5.5. The central, and you can see the Southern California 39.7 listings, actual transactions 11, and the far north the transactions are down 16. So even though listings have gone up in places as popular as California, where the prices have gotten really high, the transactional business is not what it used to be. Okay, and that's year to year change. So this is prior to last year. So that's quite significant. So just because people see their houses priced at a certain level doesn't necessarily mean the transaction will go through at that level. All right, and this is just kind of a different type of graph, but this is based on national averages. Okay, so 6.7% of the listings had price drops in order to make sales. All right, whereas if you went back to 2021, the same time, it was about 2.5%, so quite a bit. All right, and the supply average also now is 6 months of supply, which is up as well. So houses are taking longer to sell. All right, 33 days is the medium average, and you can see this is compared to other years taking more to sell as well. All right, this is from, all these charts are, by the way, from Redfin. All right, this is the home buyer demand. Look how low it is, okay, compared to the other years. So again, house prices remain high, but the demand is low. And if a recession hits us, which I think probably could be on the works for sometime next year, or even starting at some point, with Intel laying off a lot of people and so forth, that if people are forced to put their home on the market, that's going to increase supply. And at that particular point, houses are going to have to drop because demand probably still won't be that high. All right, pending sales in all Redfin metros. And this is the 2024 line here. And this is the 2021 line up here. So this is 21, this is 24, and pending home sales, the lowest it's been still. So it has not been as robust as even last year. So basically, you know, even though the listings are going up, the sales are not, and people making sales have to be more reasonable on prices. All right, so home buyers aren't yet reacting to the lower mortgage rates. This came out on August 1st. All right, with pending sales posting biggest year-over-year decline in 9 months. So I don't think this is necessarily all about interest rates, even though interest rates obviously help people to buy, but you have a big problem of the home prices still remaining so high that people can't afford them. All right, so that kind of, I wanted to cover that. I like to cover the real estate market in kind of detail because I think it's an important aspect to talk about. I want to come out of here now and take a quick look at the current market based on live charts. So this is the Dow Jones Industrial Average, and on this chart is the 60-minute chart. On this one's the daily, and then on this one is the weekly. And so notice that we now have a red momentum is now turning to the downside. This red line is our first level that we're looking at. So we have come down through a trend line. So if you're a trader, this would be an area to possibly scale out. We have another area here based on our software here telling us to start to get out. But there's no mention yet of going short at this particular point. This is a time to lighten up in case things get worse. And according to the 60-minute chart here, we're probably going to take another dip down. So we're probably looking at the next dip down, and we'll use a fib extension for this. Probably somewhere, I'm imagining this will probably come back up a little bit before it heads down, but we're probably looking at a low anywhere from 38,207 to 37,200, could possibly be a bottom for this next swing down. We may get a move up, and I want to just see on the fibs here, if I grab the fibs, ABC, well, yeah, I'd say we're probably going to head down sooner rather than later. So let me redraw these, and there we have it there. Okay, so no charts are showing at all. Okay, I'm getting give me 1 second. Let's see if that's working. Let me know if the charts are there now. Can you see the chart now? Better? Is that a yes or no? Charts are back. Okay, good. All right, so let me just go over what I was just saying. You didn't miss much, okay? I understand that the real estate information showed, but the charts did not. So what you're looking at here is the Dow Jones Industrial Average across 3 time frames. So this is the 60-minute, this is the daily, and this is the weekly. And so as you can see here, we had a trend line here, and we crossed that trend line. And so if you were a trader, this would be an area to lighten up, probably scalp out a little bit. We had another more definitive area to exit, a few more contracts there. And then we have this major support sitting right here. So as you can see, we're still above the major support, but we have come down to areas where probably it wouldn't be a bad idea to lighten up in case things get worse. However, okay, we still have a green PTF like I showed you on that other chart. This is turning red, so we're kind of still in a pulling back process. And it looks to me like, based on this chart over here, that we're probably going to come down to around 37,870 to 36,871. So we may go through this line before we see a turnaround. And so that's an indication that if that concerns you, then you probably want to lighten up on some of your portfolio. So meet with your financial advisor and see what they suggest. I do not think it's going to go down much further than that. I think after this particular move down, we'll have to wait and see. And if we still have a remaining green PTF on the daily chart here, then we can expect another move. If that abruptly turns red, then that will change things. And well, I would definitely be more bearish at that particular point. So again, we've reached the target, but right now, so far with the information that we have, there's not enough information really at this particular point to cry wolf and say we're in the bear market yet. Probably not for a little longer. Okay, so that's kind of where I'm at on that. All right, let's take a quick look here on, let's go to Bitcoin here. This seems to be another big topic here. So Bitcoin did breach into its area here in the target. However, we still have a red PTF, so I think we're going back into below 50,000 on this. So I think it's still working its way down. We now have a red PTF here. We have it here. We have it here. We have it here. But the long-term chart is still green. So this could be an opportunity to buy, but make sure you do it with money you can afford to risk. And in terms of probabilities, this wouldn't be a bad area to buy since we're expecting another large move up. Of course, there's no guarantees. So you definitely want to be using money you can afford to risk to do that. But Bitcoin, according to the long-term charts, should make another high. And that high on this, like I had mentioned before, is anywhere from roughly 87,000 up to 107,000. So keep that in mind, okay? And for those of you that do the ETF on Bitcoin, GBTC, it would be a similar scenario, of course, on that. And you can certainly see, in terms of Elliott Wave, a 3 up here, an A, B, and now a C, or complex correction, which should result after it's over in a move up. It's just not over yet, okay? So that's kind of where we're at on that. All right, so that is it for today. All right, so hopefully that helped. I think in the markets here, I wouldn't be too concerned unless we go quite substantially below that first target area. And it looks like we may go below that, but in that case, you have a situation where you could sell a little bit, but I do think the longer term charts are still showing a recovery for the market for one more high. And if the charts change, then they will change and we'll know, okay? But for right now, that's kind of where we're at. All right, so we'll see what the next couple of weeks bring. And again, if you want to have this updated every week, I have a service called the More Market Report, and it's a weekly service. I do a video basically just like this every Sunday with a report with all the updates on the levels and the charts. So that way you don't get caught blindsided, so to speak. All right, so thanks for joining us today. Have a great month, and we'll see you back here in September. It'll be an interesting month for sure. All right, take care. Give us a like, and thanks so much.